1989 Japan bubble versus 2026 Korea KOSPI. Is history repeating? Act 1. Shock, Déjà Vu. December 29, 1989. Tokyo Stock Exchange. The Nikkei index hit 38,957, a record that would stand unbroken for 34 years. Champagne popped. Japan owned the world. February 2026, Korea Exchange. KOSPI hitting record highs day after day. Some securities firms project 7,044 by year-end. Samsung Electronics and SK Hynix dominate the AI era. Korea stands tall as a semiconductor superpower. Two countries. Same story. 37 years apart. What happened in Tokyo is happening again in Seoul. And what came next in Japan? Bankrupted every Japanese investor. Even 34 years later, they haven't recovered. They call it the lost 30 years. Are Korean investors repeating the same mistake right now? Or will this time really be different? They didn't see it, can you? Act 2, Parallel Timeline. Part A, Currency Crisis. 1971 versus 2026, the collapse of the dollar. Let's go back to 1971 first. August 15th, Richard Nixon appeared on TV and dropped a bomb on the entire world. America would no longer exchange dollars for gold. The Bretton Woods system collapsed. The gold standard that had sustained the world for 25 years disappeared overnight. The dollar became pure paper, and America started printing money. Do you remember the 1970s? Oil shocks. Two of them. Stagflation. Inflation exceeded 10% annually. Milton Friedman warned us. Inflation is always and everywhere a monetary phenomenon. Now look at 2026. The same pattern is repeating. Trump's trade war. BRICS alternative currency. The dollar index collapsed 2.6% in just weeks. And do you remember 2020? Corona. Central banks around the world started printing money. US M2 money supply exploded 26% in just 1 year, the largest in history. Currency crisis, monetary explosion, asset bubble. Exactly the same sequence as the 1970s. History is starting to rhyme. 1985 versus 2024, the pressure of trade war. September 22nd, 1985, Plaza Hotel in New York. Finance ministers from the United States, Britain, France, Germany, and Japan gathered. America delivered a message to Japan. Raise the yen. Right now. Plaza Accord. The yen surged 60% in just 18 months. From 250 yen per dollar to 150 yen. Japanese exporters screamed. The government panicked. The Bank of Japan's response? Slashed interest rates from 5% to 2.5%. We have to save the exporters. Money flooded the market. And where did that money go? Real estate and stocks. Nobody invested in factories. Everyone bought Tokyo land and Nikkei shares. It was easier, faster, and seemed more certain. Now look at Korea. 2020 Corona. Interest rates crashed to 0.5%. 2025. The government announced. Capital market fostering. ISA tax benefits. Elimination of financial investment tax. The message was clear. Move money from real estate to stocks. February 2026, Financial Services Commission Chairman Lee Eo-kwan's statement. We will direct funds concentrated in real estate to cutting-edge venture and capital markets. Does that sound familiar? It should. What Japan did in 1985, Korea is repeating exactly in 2025. Japan faced the yen appreciation recession. Korea worries about one's strength. Same prescription, same mistake. Part B, the age of intoxication. 1986 to 1989, Japan buys the world. Imagine Japan in 1989, GDP number 2 in the world, half the size of America. Trade surplus is overflowing. Government debt? Only 14% of GDP. Perfect. The Nikkei index surged 200% in 4 years, but nobody worried. Why? Because Japanese companies were genuinely strong. Sony, Toyota, Hitachi, Mitsubishi. 8 of the world's top 10 companies were Japanese. Japan bought Rockefeller Center, New York's symbol, Pebble Beach Golf Course 2, California's pride. And people joked. With the land value under Tokyo's Imperial Palace, you could buy all of California. It wasn't a joke. The math actually worked out. PE ratio of 67, unprecedented valuation. But nobody cared. They said the Japanese economy was different. Japanese management, long-term investment, the keiretsu system. This time it's different. Everyone believed it. 2020 to 2026, Korea dominates the AI era. Look at Korea in 2026. GDP growth rate 1.9%, up from 1.0% the previous year. Not bad, but the real story is in the stock market. KOSPI surged 75% in just 1 year in 2025, and it didn't stop. The uptrend continues into 2026. Securities firms project 7,044 by year-end. Samsung Electronics and SK Hynix. These two companies account for 41% of KOSPI's total profits, a historic high, more concentrated than Japan in 1989. And the narrative was perfect. AI revolution, memory chip shortage, structural demand increase. Nvidia begged SK Hynix, faster chips please. Asked Samsung to accelerate supply. Samsung Electronics and SK Hynix combined control about 80% of the HBM market. The world's AI infrastructure cannot run without Korea. This is not a temporary boom. It's a structural shift. Everyone believes it. Analysts raise price targets. Samsung Electronics 270,000 won. SK Hynix 1.45 million won. Individual investors take out loans to buy stocks. This time is different. Why? Because semiconductors are real, because AI is real, because demand is real, and in 1989, Japan said the exact same thing. Sony is real, Toyota is real, technology is real. They were right about everything, except one thing, it was a bubble. Japan 1989, 8 of the world's top 10 companies. Korea 2026, 41% of KOSPI profits from 2 companies. Japan 1989, technology dominance is forever. Korea 2026, AI chip shortage is forever. Japan 1989, we own the world. Korea 2026, we are an AI superpower. Japan 1989, PE of 67, Korea 2026. Valuation doesn't matter. Structural growth. The most chilling part, every investor in 1989 Japan had the data. Strong fundamentals. The world's best companies. Technology leadership. They were right about everything. Except one thing. It was a bubble. Act 3 trigger, how it ends. Japan's collapse mechanism? December 1989, New Bank of Japan Governor Yasushi Mieno took office. His mission was clear: pop the bubble. Everyone knew about the bubble, but nobody wanted to get out first. Mieno didn't hesitate. Starting January 1990, he began raising rates from 2.5% to 3%, from 3% to 4%, from 4% to 5%, to 6% in 18 months. The market shook. At first, people thought it was just a correction, a buying opportunity. But rates kept rising. Real estate lending restrictions poured in. Banks started calling in loans. December 1990. The Nikkei index fell 38% from its peak in just 1 year. But it was only the beginning. Real estate prices began collapsing. Slowly, relentlessly, for 15 years. Banks drowned in bad loans. Companies became zombies. They couldn't pay off debt or invest. They just survived. The Japanese government delayed restructuring. If we wait, it will recover. 20 years passed, 2010. The Nikkei was still 60% below its 1989 peak. GDP was the same as 1994, $5 trillion. 16 years with no growth. They named it the lost decade. Then the decade became 20 years. Then 20 years became 30 years. Only in 2024 did the Nikkei recover its 1989 peak. It took 34 years. Korea 2026, the triggers. First trigger, AI investment fatigue. Big tech companies invest 943 trillion won in AI in 2026. But profits? ChatGPT is still losing money. Meta's AI doesn't make money. Shareholders start asking, when will you make money? CEOs have no answer. One day a big tech CEO announces, we're cutting AI investment by 30%. The market panics. HBM orders get canceled. Samsung Electronics and SK Hynix shares plunge 10%. Second trigger, household debt, 89% of GDP. Japan in 1989 was 14%. What if rates rise? From 0.5% in 2020 to 3% in 2026. Households can't handle the interest. Consumption falls. Domestic demand collapses. Corporate earnings deteriorate. Stock prices drop. People who bought stocks with loans have to sell. The vicious cycle begins. Third trigger, China. SMIC develops its own HBM. Quality is lower but price is 30% cheaper. The Chinese government orders its companies, don't buy Korean chips. Korea's HBM exports fall 20%. Samsung and Hynix profits plummet. KOSPI shakes. And everyone remembers these two companies account for 41% of KOSPI profits. Fourth trigger, geopolitics. China invades Taiwan. Or North Korea fires missiles. Or America demands more defense spending from Korea. Foreign investors flee Korea. Whatever the trigger, the result is the same. KOSPI collapses. And because 41% of the Korean economy is concentrated in two companies, the entire market crumbles. Act 4, twist, similar but fatally different. Part A, 3 reasons Korea could survive. Everyone says Korea follows Japan. They're half right. Korea is repeating Japan's mistakes. But there are 3 decisive differences. First, Korea learned. Studied the Japanese bubble for 30 years. Bank of Korea reports, KDI analysis, Financial Research Institute papers. Policymakers know Japan's mistakes. Financial regulations are stricter, LTV, DTI, more rigorous than Japan. Restructuring experience too. 1997 IMF, 2008 financial crisis. Korea knows how to handle crises fast. Second, the technology is real. Japan's bubble was real estate, land, buildings, speculation. But Korea's story is semiconductors. AI won't disappear. Memory demand is real. Samsung Electronics and SK Hynix control about 80% of the global HBM market. Supply shortage expected through 2028. This is not speculation, it's structural demand. Third, America needs it. 1989 Japan was America's competitor. The Plaza Accord was meant to destroy Japan. But 2026 Korea is America's ally. America needs Korean semiconductors to contain China, to maintain AI supremacy. America has no reason to destroy Korea. It has reasons to save it. So maybe, perhaps, Korea can avoid Japan's fate. Maybe this time really is different. Maybe. Part B, 5 reasons Korea could fall deeper. Or Korea could be worse than Japan. 5 fatal differences. First, debt structure. Japan 1989, government debt 14% of GDP. Sound, Korea 2026, household debt 89% of GDP, OECD's highest level. Understand the difference? In Japan, companies failed. Restructuring was possible. In Korea, households fail. Individuals, then consumption collapses. The entire economy freezes. Second, demographic cliff. Japan in 1989 was still young. Working age population at its peak. Aging rate 11%. Total fertility rate 1.57. Time to recover. Korea in 2026 is already old. Working age population declining since 2017. Aging rate 20%. Super-aged society. Total fertility rate 0.72. World's lowest, unrecoverable level. Japan experienced the bubble when young. Korea experiences it when old. Do you know what this means? Japan had population to recover with. Korea doesn't. Third, industry concentration. Japan 1989 was diversified. Autos, electronics, machinery, chemicals, finance. If Sony failed, Toyota was there. If Hitachi failed, Mitsubishi was there. Korea 2026, 41% of KOSPI profits from 2 companies, Samsung and Hynix. All in on semiconductors, one industry. If semiconductors collapse, Korea's entire economy collapses. No alternative. Fourth, speed. Japan's bubble formed over 4 years, 1985 to 1989, slowly, gradually, and collapsed over 13 years, 1990 to 2003. Korea, 75% surge in just 1 year in 2025. Fast, too fast. There is a physics law. What goes up fast comes down fast. Remember the dot-com bubble? 80% crash in 2 years. Korea's bubble is not Japanese style, not a real estate bubble. This is a tech stock bubble. AI theme, dot-com 2.0. And tech stock bubbles burst much faster than real estate. Fifth, geopolitics. Japan 1989 was safe, protected by America. No security threat. The Cold War was ending. Korea 2026? North Korea nukes. Chinese pressure. Taiwan war risk. At the front line of US-China conflict, economic crisis and geopolitical shock could come together. Japan never faced that. Part C, twist. This is not a Japanese bubble. Everyone's wrong. Korea is not repeating Japan. Korea is repeating the 2000 dot-com bubble. Japan's bubble was real estate, land and buildings, physical assets. Real estate bubbles collapse slowly. Takes 15 years. Korea's bubble is tech stocks, AI chips, thematic stocks, like dot-com, and tech stock bubbles burst fast. March 2000. Nasdaq peaked. October 2002. 80% crash. Just 2.5 years. Recovery took 15 years. This could be Korea's future. Faster than Japan, deeper than Japan, harder to recover from than Japan. Because Korea is old, heavily indebted, and has no alternatives. Act 5, Judgment, 4 scenarios. The future splits into 4 paths. Scenario 1, soft landing. Probability 20%. AI boom lasts 3 to 5 more years. Korea gradually diversifies industries, manages household debt. Geopolitics stays stable. KOSPI plateaus between 4,000 and 5,000. Best case scenario, but probability is low. Scenario 2, Japan repeat. Probability 40%. Bubble pops between 2027 and 2028. Long depression lasting 10 to 15 years. Household debt crisis. KOSP falls 50% over 10 years. Lost decade. Korean version, most likely scenario. Korea experiences what Japan did, just more painfully. Scenario 3, accelerated collapse. Probability 30% dot-com style crash. KOSPI drops 60% within 2 to 3 years. AI bubble pops. Household debt triggers chain defaults. Consumption collapses. Domestic demand collapses. Faster and deeper fall than Japan. Recovery harder, because Korea is already old. Scenario 4, geopolitical black swan. Probability 10%, Taiwan war, or North Korea crisis. Economic crisis and security crisis come together. Foreign capital flees Korea. KOSPI crashes. Won crashes. Financial system paralyzed. Uncontrollable. Worst case scenario. Low probability but catastrophic impact. Final question. History doesn't repeat, but it rhymes. 1989, Japanese investors thought they were geniuses. 2000, American dot-com traders thought they were geniuses. 2007, American homeowners thought they were geniuses. 2026, Korean investors think they're geniuses. Do you see the pattern? December 29, 1989. Nobody in Tokyo knew that day was the peak. The party continued for months. People kept buying. It got more expensive, but they kept buying. February 24, 2026. Nobody in Seoul knows. Are we witnessing history's greatest comeback story? Will Korea succeed where Japan failed? Or is this history's most chilling repetition? Will Korea fall faster and deeper than Japan? The answer to this question will determine the next 30 years. For 51.61 million Koreans, for the global tech supply chain, for your portfolio. And if you're investing in Korean stocks right now, you have to choose genius or fool, like Tokyo investors in 1989, like Silicon Valley traders in 2000, like Miami homebuyers in 2007. They didn't know. You will know. Soon. Do you want to know the 7 warning signs before a bubble bursts? The signals Wall Street watches but never speaks about? The patterns that appear when institutional investors quietly slip away? Part 2 launches next week. Because if you're invested in KOSPI right now, you need to see this. If 1989 Tokyo investors had known this, they wouldn't have gone bankrupt.